traders, Gary Wagner here, just before noon in Honolulu, 6 o'clock in New York. It is Tuesday, the 27th of March, 2018, and this is the Daily Report for Gold and Silver. Sharply lower pricing in the precious metals complex, resulting in gold closing $10.40 lower at $1341.60, and silver off by 16 cents at $16.52. Dollar upside bounce put it at 88.95, and the Dow reversed from yesterday's dynamic upside move, closing lower by 344 points at 23,857. Very little action in Bitcoin futures, closing off by about $35 at 77.95 and 79.15 in the CBOE and CME futures exchanges. Traders, an extremely interesting day with the precious metals falling under pretty strong pressure. Gold currently down about $11 on the day, trading at $13.44 per ounce. What I find interesting about the makeup of today's trading activity is if you look at this high here, you can see it came in at $1353.60, which is actually the highest price point that gold traded to since this rally began, and in fact, the highest point that gold has traded to since hitting these highs back around mid-February. Unfortunately, those highs achieved in overseas trading last night were short-lived, and gold, along with silver and the entire precious metals complex, did come under pressure as trading moved into the United States, resulting in this strong red candle and dramatically lower pricing. Half of the sell-off today is directly attributable to a strong U.S. dollar, but the other half is attributable to profit taking. It was for that reason that this morning I sent out a trade alert recommending that we move our stop up to 1336, which is just below the 23% retracement at 1336.40. If we cannot see this market recoup, especially after the dramatic decline in U.S. equities, we could see some sort of a retracement from this recent rally, and I do want to pull profits as much as we can from our current trade. Therefore, maintain your current long in gold, maintain your current stop at 1336. As I reported earlier, it was dollar strength that was a great contributor to today's decline in precious metals, but it is very interesting where this bounce occurred. This bounce occurred at precisely the 61.8% retracement at 88.58, a price point that we have earlier identified as a critical level of support. Silver also traded under pressure today, losing about 16 cents, a full percentage decline in terms of pricing. What we find interesting when we look at our charts is the fact that the 50-day moving average is precisely where silver opened at today as well as closed at yesterday, thereby indicating tremendous resistance at this price point. As long as silver's pricing remains under both the 50 and 200-day moving average, we have to remain neutral to bearish. Lastly, I do want to take a quick look at Bitcoin futures, which closed up about $90 at $8,000 per coin. Now, although we had a small uptick in the market, as indicated by this green candle, we have to put a heavy weighting on the fact that we had a lower high as well as a lower low on the day, indicating a further decline in pricing, which could take Bitcoin pricing to 7,300, which corresponds to the 78% retracement. Traders, it is a fickle market when we look at equities, which staged a dramatic upside spike yesterday, the third largest point gain in history, followed by a 344-point decline. More perplexing is the fact that gold didn't react in a positive way to the sell-off today. We'll have to see how this all unfolds. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.